Learning how to read your paycheck can be painful, but do you know what's more painful? Mistakes on your paycheck. So in that spirit, let's cover 20 key items you want to check with every paycheck you receive. And hi, if you're new to the channel, my name is Tay from Financial Tortoise, where we learn to grow our wealth slow and steady. Number 1 item to check on your paycheck. This one is the obvious one. Your name and your employee ID. You want to make sure your name is spelled correctly and that it is the correct employee ID that matches with your employment contract. You catch this error down the line and it can create not only a headache for yourself, but for your payroll and HR department. Number 2 item to check on your paycheck. The pay period and the pay date. The pay period is a time frame during which you worked. For example, a biweekly pay schedule calculates a 2-week or a 14-day pay period. The pay date is the date that you receive your paycheck or is deposited into your bank account. It's really hard for companies to screw this one up, but it can happen, so check to confirm. Number 3 item to check on your paycheck. This is where we get into the good stuff. Your pay rate. For salaried employees, this usually is your annual salary reflected hourly. For hourly employees, this is your hourly rate. Make sure the rate aligns with what's in your employment contract, and especially if you had any changes in this number. Number 4 item to check on your paycheck. The total number of hours worked. The hours worked indicates the amount of time you spent at work. For salaried employees, a paycheck will typically cover all work completed within a 40-hour work week. For hourly employees, this will reflect the actual hours you worked plus any overtime. Check to make sure they reflect what's in your pay record, especially if you worked inconsistent hours. Number 5 item to check on your paycheck. Your gross income, or sometimes called total earnings. This essentially is the total amount you earn before any deductions. If you're a salaried worker, this number will reflect the amount you earn each pay period before taxes and any other deductible expenses. For example, let's say your annual income is $60,000 based on your employment contract and you're paid semi-monthly, 2 times a month. $60,000 divided by 24 is $2,500 per pay period gross income on each paycheck. If you're an hourly worker, this amount will equal your pay rate multiplied by the number of hours you worked during a specific pay period. Again, before taxes and other items deducted. Overtime and bonuses will be included in this category, so double check this section because this is a starting number before any deductions. A quick interruption before we move on. If you haven't yet downloaded your free copy of my 10-step guide to securing your family's financial future, I highly recommend you do so today. Not only is this a great free financial resource, but you'll also be joining my email newsletter. Newsletter where you can connect with me directly, as well as be the first to know regarding any new services or products I plan on offering in the future. Please go to my website at financialtortoise.com and download your free copy today. I'll also have a link in the description below. Alright, with that said, let's get back to the video. Number 6 item to check on your paycheck. This is where we start getting into taxes, and the biggest one being federal tax, or oftentimes listed as federal withholdings. Federal withholding stands for what the IRS collects each pay period for federal income tax. A portion of your earnings the federal government takes to support national programs apart from Medicare and Social Security. How much is withheld from your paycheck depends on your tax status, income, and number of dependents you're claiming, all derived from the Form W-4 that you filled out when hired. Federal tax is a big portion of your paycheck, so you want to find ways to lower this as much as possible. Most common ones being putting more of your salary into your retirement savings plans like the 401k, or saving for healthcare expenses in a health savings account, also known as HSA, or flexible spending account, aka FSA. We'll cover more on this later. Number 7 item to check on your paycheck. Social Security tax, most often listed as FICA or OASDI. FICA, short for Federal Insurance Contribution Act, is a separate federal payroll tax that funds Social Security and Medicare, government programs that provide income and medical care to seniors. On our paycheck, this deduction can appear as a single FICA item or as a separate Social Security and Medicare line items. FICA amounts to 15.3% of our earnings. However, if you work for a company, your employer is responsible for 50%. So the amount deducted from our paycheck should just be 7.65%, 6.2% for Social Security, and 1.65% for Medicare. If the amount of Social Security tax you see withheld in your paycheck is less than 6.2% of your gross income, it's likely because you're a high earner. The federal government only collects Social Security tax on wages within what's called a wage stage. For 2023, this is 160-200. You don't owe Social Security tax on income above that level. Alright, moving on. Number 8 item to check on your paycheck. Medicare tax. Taxes support the Medicare program. This portion of FICA tax, as stated earlier, amounts to 1.45% of your income. But unlike Social Security tax, there is no cap for high earners. Actually, if you make more money, you pay more in Medicare tax. If you're single and earn more than $200,000, you'll owe an additional 0.9% on income above those levels. So let's say you've been rocking it and you're making $250,000 a year as a single filer. You'll pay 1.45% Medicare tax on $200,000, which equals $2,900. Then you'll pay additional 2.35%. 1.45 plus 0.9 on the remaining $50,000, so another $1,175, totaling over $4,000 in Medicare taxes alone. These calculations are done automatically by your company's payroll system, but it doesn't hurt to do the math yourself just to confirm. Number 9 item to check on your paycheck: state tax. This is a portion of your income tax that covers taxes owed to your state government. Let's do a quick fun exercise. Which state do you think has the highest state income tax? If you guess California, you are correct. My current state of residence, California, has the highest state income tax compared to every other state out there. We like to call it the weather tax. The second highest is Hawaii, and the third highest is New Jersey. In states with 0 state income tax, there are actually 8. Wyoming, Washington, Texas, Tennessee, South Dakota, Nevada, Florida, and Alaska. If you're lucky enough to live in one of these states, you'll not even see this item on your paycheck. Additionally, if you live in New Hampshire, you'll also find this line item missing because it limits the state tax to interest and dividend income, not income from wages. Number 10 item to check on your paycheck: city tax. Depending on where you live, a portion of your paycheck may also go towards additional taxes levied by your city, county, or even school district on top of your state and federal taxes. 17 states and the District of Columbia allow cities and counties to charge these separate local taxes. For example, if you live in New York City, you'll pay a city income tax ranging from 3% to 3.9% depending on how much you make. Number 11 item to check on your paycheck: state disability insurance, or also known as SDI. State disability insurance is a separate tax charge by some states to provide short-term disability insurance and paid family leave benefits for people who need time off from work. It allows those who are temporarily unable to work because of illness, injury, or caring for a family member to receive wage replacement compensation or a portion of their pay while away. Currently, only residents of California, Hawaii, New York, Rhode Island, New Jersey, and Puerto Rico will see this in their paycheck. Number 12 items to check on your paycheck: tax data. Your pay stub may also reflect your tax filing status: single, head of household, married filing separately, married filing jointly, or qualified surviving spouse. The number of dependents you claimed, and any additional amount you elected to have withheld from your paycheck for tax purposes when you completed the Form W-4 when hired. It's a good practice to revisit your W-4 from time to time, especially if you experience major life milestones such as getting married or having a child. If you're unsure if you completed the form correctly, or you feel your employer is over or under withholding, you can use the IRS's tax withholding estimator tool to calculate your estimated federal tax. I'll include the link in the description below. Play with changing your withholding to see how it affects your take-home pay and potential tax refund, or a tax bill. Number 13 item to check on your paycheck: pre-tax deductions for health, vision, and dental insurance premiums. Depending on what benefits your company offers and which ones you elected to participate in, you'll see pre-tax deductions listed on your pay stub in addition to the various taxes that we just discussed so far. These deductions come off your gross income before taxes and therefore reduces the amount of your income taxed by the IRS in your state. And of these deductions, the first most common pre-tax deductions are health, vision, and dental insurance premiums. If you get your healthcare coverage through your employer, this is a portion of that expense that you pay each pay period. Each company has their own policy as to what portion of the healthcare coverage expense the employer pays and what the employee is responsible for. And most often, most pay stubs will display your health, vision, and dental insurance contributions separately. That is if you have all three, because employers typically offer several different options for each kind of coverage. Study your employer's health benefits. You want to make sure you're selecting the health benefit that is not only most optimal for your family's health situation, but financial as well. When my wife and I were covered under our employer, we often offered the lowest cost HMO plan because we didn't have pressing health issues, and it allowed us to pay the least out of pocket. Number 14 item to check on your paycheck: pre-tax deductions for retirement plan contribution. This is another common pre-tax deduction you'll find in most paychecks. That is, if your company offers one. Any portion of your salary that you divert to savings for retirement through a 401k, 403b, 457, or a thrifty savings plan will appear as its own line item on your paycheck. It may be listed under the type of plan such as the 401k, or sometimes under the name of the financial institution that administers the plan, like Fidelity or Vanguard. In 2023, up to $22,500 of your pay can go into one of these retirement accounts. In my personal opinion, this is one of the easiest and the best way to lower your taxable income. If you have the means to, max this account out. You'll learn to live on less, pay less in taxes, and you're putting more of your money to work for you in the market. Number 15 item to check on your paycheck. Let's get into other pre-tax deductions such as HSA, FSA, or even commuting cost. First, the health savings account contributions, also better known as HSA. If you elected a high deductible healthcare plan as your medical coverage, you can open up a HSA and set aside a portion of your salary to cover medical expenses, deductibles, and co-payments. For 2023, individuals can contribute up to $3,850 and families $7,750. Another great tax lowering strategy in my book. If you'd like to learn more about the HSA and how it can work as a secret early retirement account, I'll have a link to a video where I delve deeper in the description below. Flexible spending account, also known as FSA, the lesser attractive younger cousin to the HSA. Like the HSA, you can save a portion of your income for future healthcare costs. However, one downside is that many programs operate on a use it or lose it basis, and the limit is a bit lower at $3,050. If you have an option between FSA and HSA, I'll choose HSA in a heartbeat. But if FSA is your only option and you know you have a medical expense within this year, this is a great pre-tax deduction. You also want to be aware of another type of common FSA, the Dependent Care FSA. If you have children aged 12 and younger, or adults that can't look after themselves, you can use Dependent Care FSA to pay for care expenses. Given I have young kids, I personally use this for many years and have saved thousands of dollars in taxes through this vehicle alone. Another pre-tax deduction, not as common though, that you want to be aware of is commuting cost. Employers who offer a commuting benefit program allow employees to contribute up to $300 of their pay a month to pay for transit or parking costs necessary to travel to and from the office. It works similar to a Dependent Care FSA. Number 16 item to check on your paycheck: after-tax deductions. Once pre-tax deductions and taxes have been withheld from your income, some employers may allow you to direct a portion of your remaining income towards other expenses such as union dues, charitable donations, or Roth 401k. Or employers may be ordered by the court or the IRS to garnish a part of your after-tax wages to cover unpaid taxes, child support, alimony, or defaulted loans. Make sure to check your after-tax deductions for accuracy. Number 17 item to check on your paycheck: employer paid benefit. These are benefits provided by the employer that are paid for or subsidized entirely by the employer. Some common examples of employer benefits include portion of health insurance premium, retirement contribution match, life insurance, and disability insurance. When companies are calculating headcount costs, this is the number they'll use, not your salary. It could come in handy when negotiating salary increase or even when comparing benefits package from other companies. Number 18 item to check on your paycheck: current deductions. The total amount of money your employer has deducted from your gross wages to pay for taxes, pre-tax benefits like retirement accounts or health insurance, and any after-tax expenses like union dues or unpaid child support during the current pay period. Pretty much all the deductions that we talked about so far. Errors are rare given it's a simple math, but it never hurts to double check. Number 19 item to check on your paycheck. This probably is the most important item that matters to you: your net pay. How much you actually get to take home during this pay period. It's essentially your gross wages minus all the deductions. It's always funny to see new employees getting shocked by how much less their take-home pay is in comparison to their gross wages. If you want to control this number to your benefit, understand what is being deducted, why, and what you can do to change it. Number 20 item to check on your paycheck. Another very important category: time off. Many paychecks will show your sick leave, paid time off, or vacation hours accrued, as well as the amount used or remaining for the calendar year. Understand your time off cap, any use it or lose it policy, and make sure you're using your time off not only for your mental health benefit, but so you aren't leaving any money on the table. Alright guys, I know that wasn't the most exciting video, but learning how to read your paycheck is a crucial life skill to master if you want to master money. So thank you guys for watching, and in the spirit of money skills, if you want to learn 40 life and money skills you want to master before 40, please check out my video here. Until next time, all the best.